Hey everybody, it's Lisa Last here, and today I wanted to talk to you guys about something called a prepayment penalty. So, every mortgage in Canada, if it's a closed mortgage, which 99% of them are, if you decide to pay your mortgage out in full before your term is up, traditionally a 5-year, the lender will charge you a penalty. That penalty is set in stone on your mortgage paperwork when you sign at the law firm. And that mortgage paperwork is going to say one of three things. Your prepayment penalty is 3 months interest, your prepayment penalty is interest rate differential, or your prepayment penalty is 3% of the balance. Those are the three basic standards here in Canada. When you're getting a mortgage, people focus usually just simply on interest rate. Best rate, best rate, best rate, best rate. But it's incredibly important when you're getting a mortgage to talk to the mortgage professional not only about the rate, but about how the prepayment penalty is calculated. Currently, statistics in Alberta show that people under the age of 35 move every 2.78 years. Which means if you're under 35 and you currently have a mortgage, there's a likelihood that you may break the term on your current mortgage. If it does not make good sense or it's not possible to port the mortgage that you have to the new property, you will be paying a penalty. So in addition to paying for your legal fees, your realty fees, real property reports, cleaning, maintenance, that kind of thing, you're also going to have to calculate in a prepayment penalty. Now, if that penalty is a simple 3 months interest, it's a pretty easy calculation to figure out. On an average $350,000 house, you're probably looking at about $2,600. Not that hard to swallow. If we're looking at a 3% penalty on a $350,000 property, the penalty is $10,000. If we're looking at something called IRD, interest rate differential, that penalty could be anywhere from a couple of grand all the way up to, I've seen them upwards of $45,000 depending on the property. So when you're shopping for a home, let's focus on more than interest rate. Let's focus on service, let's focus on lender stability, and let's focus on prepayment penalty. Now, not to pick on my friends at the big banks, but they historically charge much higher penalties because when they prepay your mortgage, they charge you based on your best rate to their posted rate. Whereas a monoline lender, like a First National or Merrick's or Street Capital, they traditionally charge penalties based on best rate to best rate. So your penalty can be significantly lower with a mortgage lender versus with a bank. So next time you're shopping for a mortgage, whether it's a refinance, a renewal, or a purchase, make sure you're asking these important questions. And if you want to give me a call, you could reach me at 780-951-1434, or feel free to check me out online on my Facebook page or LisaLast.com. Thanks very much.